Hello friends, namaste. Hope you are doing good. Some of you wanted a rationale of, trying to pick up market reversals or how did we, analyze and pick a market trend change or a bottom essentially today. So this is something that happened today, but it applies across, multiple days. You can see these patterns playing out regularly over time. So I'll just quickly do an analysis and share it with you. So first of all, the context behind it. Okay, so what has, what is the what is the picture here? So it's not just an order flow story that you play out for. Okay, you build some context around it, and then you apply order flow to sort of validate that context and then take a trade. Okay, so what we had here is if you see this day was a consolidation day, so each of these profiles represent one day. Okay, so this day was a consolidation day and then we had a breakout and a strong close. Next day it opened here and then broke out and sort of went up. Okay, then I think yesterday market zigzagged around here and then we had a sell off towards the end and it closed towards the lower end. Okay, so overall, market had established a bit of a range in this zone, which is the zone that we'd marked, especially this zone, the value zone, where we said that this is the range market is looking to play around basically. So which was about for me 360 370 and I think 250 to something 260 ranges. Okay, so this is the range we decided that will play out. Okay, so that is the first thesis that we had in plan, that generally when this range is there we will look to pull back trades within this range. Okay, now think of what how traders would have positioned or what could have happened. Okay, so again, so now if you see yesterday we had a run up and then we had a late fall and then a pretty neutral close sort of a thing. Okay, so then that essentially means there were sellers there in the towards the close would have taken short positions or things like that. Okay, so assuming the overall trend being turning to be negative essentially at this point. Now today it opened higher, almost tested yesterday's highs. Okay, and then it pulled back lower. So on the face of it, this becomes a very good, short side scenario where we would fail to take out yesterday's high. We also started moving below yesterday's close, okay, which is this level of, 320 something levels, rough 300, 320 levels, okay. So, so now if you think of it, generally you would want to short below this level as a failure of a, upside move. So we would want to short for a downside continuation as a normal trader. Now, what was happening and playing out was if you see let's say shorters now said okay, now this was a low made, we want to short below these low, right? Now if you see this range, okay, this is what I really sometimes emphasize on. If you see this range, this range to this range, okay, if you see this range, what has happened is price almost sort of at the end of this range price was neutral, there was no change in the price. But look at what has happened in the delta. So delta kept on smashing lower, lower, lower. So basically there were sellers who are continuing to hit hard, hit hard, hit hard. Okay, now at any point, remember, irrespective of this trade or any trade, at any point it's always a 50-50 probability of where market can move from here. Okay, up or down, it's always a 50-50 coin toss chance. Now all we are trying to do, everybody, we are using our different kinds of analysis, technical analysis, levels, things like that, for whatever analysis that is there, to build in data points, bring in analysis, and then trying to figure out, you know, which side has a better odd of happening, right? That's all. Which side has a better odd of happening, right? So generally, what could have happened here when the sellers are coming in hard, that but prices are not going down means there is a there's a limit bias setting at these levels who are absorbing those prices, right? Okay. Now two things can happen. One, buyers give up, okay, and then eventually the down move happens, okay, which can happen and it does happen a lot of times. Two is that the last seller is done, he's done with selling, there is no more seller left in the market. So then the aggressive buyer steps in and then starts lifting prices up. Okay, so one of these two things can happen, right? That's all. That's the only two scenarios that can happen. And we sort of waited for it and we picked up the bottom here, I think, or here pretty nicely, and then we had this trade up. Now next question is with how up or how much can these trades go. So what is happening is if you see, once these lows were getting hit, I had this level of 260. Okay, so we had this big sell below 260 levels. Okay, this, if you see this big seller order, it was all imbalance sell, indicating probably stop runs or things like that. And then prices stalled and then prices pulled back immediately next candle. Okay, so now Your initial would be the mid ranges would be 320. That is where really your initial target would be. It went to there. Now you do not know whether this can sustain, not sustain longer. So what is the next case here? Whether it can continue longer or not. Then we look at two things. Okay, one, again, when it tries to test down, does it push lower? Cannot push lower. If you see here again, a lot of absorption happened and then prices closed lower, and then here, buying starts coming in. So essentially, the limit buyers or the institutional buyers have shifted to a higher price points, which essentially means they are aggressive now, trying to sort of get in at a higher price and are willing to risk that, essentially trying to get in at a higher price. Okay, and then eventually we have this impulse move up, and the entire move happens and plays out. Okay, so you can get in at a lot of points as a trader. You can get in, after this happens, you can get in once this failure pulls back happens and it starts holding, you can get in here. You want to more confirmation, you can get in after a major bullish candle happens. Okay, so there are different points you can get in, and eventually it's all about risk and reward. But that's the general play. Okay, and that's the general play. And if even if you get in here, there was a pretty longish play available from those points also, about 100 points in Nifty. Okay, so that all depends on your risk reward appetite, your position sizing, your. So my general way of doing trading is I'll try to get in here, scale in something, okay, lock in something here. I again, if I see here, I'll try to get in, add more positions, and then the final move I'll also add more positions. So, and of course keep my trailing stop losses higher. Okay, that's how I trade. Okay, these are the trades we discussed today in our community. I think a lot of people were looking for this kind of a setup today. We all picked it up collectively well. We have a great trading community at FNO Traders. Join in and be part of this community. We are looking at building a very core process around data, around context, order flow, and then taking decisions. Right or wrong is one thing, but eventually we're looking at refining our process and strategies. Okay, so join in and have a great day. Yeah, thank you.